This is Eileen Griffin with the Heartland View from the Heartland Daily News. This week's major public policy stories include news from budget and tax, as well as rights and justice issues. So let's get started. Our first story is on free speech, censorship, and big tech. The Heartland Institute's Vice President Jim Lakely, along with Media Research Center's Brett Bozell and 30 other conservative leaders, are calling for the breakup of big tech. They issued a statement that in part reads the following, quote, "Big tech has declared war on free speech and is now an existential threat to democracy. The tech tyrants began to systematically shut down the conservative movement over the weekend. This is an all-out assault on our republic from within, like we've never seen before. We will not stand idly by as they cancel conservatives for daring to speak freely. Freedom has never been threatened like this before. We live our lives online, especially now during the pandemic. The entire conservative movement will be canceled by the left and their thugs if we let them. They will turn the screws on conservatives if we don't defend our rights. It's time to stand up and demand the breakup of these big tech monopolies." End quote. And speaking of censorship and the cancel culture, Budget and Tax News reports that a purge has begun. In the wake of the protest that turned to a mob that turned into a riot in the U.S. Capitol, various media and high-tech companies have used the movement not to simply condemn the violence, but to remove the President of the United States and countless other Americans from their digital platforms. It's understandable that many Americans are shaken by what they saw, but it's part of the larger pattern of mob rule. And in economic news, the report from January 15th indicates that despite weaknesses in several areas, the overall economy continues to expand. December retail sales show a slight decline from November for the second consecutive month. Even so, sales are up 3% over a year ago and above their prior peak. Inflation news for December was mixed. The Consumer Price Index rose at a 4.5% annual rate because of sharply higher oil prices. For the past year, consumer prices were up 1.5%. Although the economy remains strong, the job market continues to suffer. Initial unemployment claims for the first 2 weeks of the year were 876,000. That's up 50,000 from December. Biden's $1.9 billion stimulus program will shift funds out of the private, productive economy. Biden also promises infrastructure and climate programs will follow as he moves to bring U.S. policies in line with those that destroyed the economies of Greece and Italy. The additional spending, combined with the Federal Reserve's purchase of securities, can produce a short-term sugar high. As the federal government usurps more of the economy's spending power, however, there will be less resources available to the private sector. At that point, the sugar high ends and the hangover begins. Interest rates were mostly stable this past week, with longer-term rates holding close to their recent high. Stocks remain overvalued and overdue for a correction. Even so, with the aid of a highly expansive monetary policy and strong real growth, the near-term outlook for stocks remains cautiously optimistic. And that's it for the Heartland View. To read full versions of all these stories, as well as many others, please go to our website, heartlanddailynews.com. And if you believe in free markets and support a free market economy, consider supporting the work of the Heartland Institute. You can go online and make a donation very easily. Just go to heartland.org. Thank you for your time, thank you for listening, and have a great week.